What if I told you that in this city, crossing a single street can change a home's value by 6 figures? Same square footage, same year built, same school district on paper, and yet one block over, the numbers tell a completely different story. In this video, I'm going to break down neighborhood volatility and zoning hurdles that catch buyers and investors off guard here, including what's happening on streets like Wright Avenue and in Capitol Hill. By the end, you'll know how to spot a volatile block before you buy, how the 2026 zoning changes affect your options, and how safety trends quietly shape long-term appreciation. If you're thinking about buying or investing here, this could save you from a very expensive mistake. Before we dive in, every week I hear from people just like you who are thinking about buying, selling, or relocating to Central Arkansas. And that's my favorite part of this job. If that's you, whether you're 6 months out or just starting to explore, reach out through the contact information in the description below. I'm happy to answer questions, share neighborhood information, or just point you in the right direction. So let's get into it. Street by street volatility. Let's start with the street by street inconsistency because this is a thing that surprises people the most. In a lot of cities, you can look at a neighborhood average and get a reasonable sense of what homes are worth. Here, that approach will burn you. Take Wright Avenue as an example. On the north end, you've got well-maintained homes, established owners, and sales that consistently land at or above list price. If you walk 3 blocks south, you'll find deferred maintenance, a higher concentration of rentals, and values that can sit 15 to 20% lower for nearly an identical floor plan. Capitol Hill tells a similar story. Certain pockets have seen tremendous reinvestment with renovated homes, new small businesses, and strong buyer demand. But that momentum is not evenly distributed. One block might be appreciating steadily, while the next one over has stagnated for years. The drivers are usually hyper local. The condition of a handful of key properties, proximity to a troubled intersection, or whether investors or owner occupants dominate that specific stretch of the road. Zillow and the big portals average all of this together, which is exactly why their estimates can be wildly off in these areas. So, what does this mean practically? First, never evaluate a property based on neighborhood level data alone. Pull comparable sales from the same block whenever possible, not just the same zip code. Second, drive the block at different times of day before you write an offer. What you see at 10 a.m. on Saturday can be very different from a Tuesday evening. Next, look at the ratio of owner occupied homes compared to rentals on that specific street because blocks with heavy owner occupancy tend to hold value far more consistently through market cycles. Let's talk about zoning because 2026 brought some significant changes that a lot of buyers still haven't caught up with. The biggest one affects short-term rentals. Under new local rules, short-term rental permits are now restricted in most residential zones. There's a capped number, and in several districts, they're limited to owner-occupied properties only. If part of your investment strategy was buying a home here and putting it on the short-term rental platform, that math may no longer work, depending on exactly where you are, if you're in Little Rock or if you're outside of the city. These rules do vary district by district, though. The second major change involves redevelopment. Several neighborhoods, including parts of downtown Capitol Hill now sit under overlay districts that tighten what you can build or convert. Lot splits, additional dwelling units, and multi-unit conversions face stricter review than they did even a year ago. For some owners, that's good news because it protects neighborhood character and limits speculative teardowns. But if you were counting on adding an ADU or subdividing to make the numbers work for you, you need to verify what's actually allowed before you decide to write an offer and especially close. Don't wait till after. So before you make an offer on any property where income potential or future development matters to you, request a zoning verification for that specific address. Check whether the parcel sits on an overlay district, if short-term rental permits are available in that zone, whether there's a waiting list or a cap. This can take a few days, but it would be worth every minute of that to do that due diligence before wasting your time and money. Next, let's talk about safety and how it affects long-term value. I'll be honest here. Security concerns are real in certain pockets of this market, and they have measurable effect on appreciation. Blocks with reoccurring property crime or visible disorder tend to appreciate slower and sit on the market longer and attract a more transient tenant pool. For landlords, that means higher turnover, more wear and tear, and thinner profit margins, even when the purchase price looks great on paper. The nuance that headlines miss is that safety trends aren't static. They're not uniform. Some areas that had rough reputations 5 years ago have improved dramatically thanks to neighborhood associations, new lighting, and reinvestment into those neighborhoods. And early buyers in those pockets have been rewarded with strong appreciation. The key is to look at the big picture and see what direction of the trend we're in, not just the current snapshot. Pull the crime data block by the block. Pull crime data by block group over a 3 to 5 year window. Talk to the neighbors. That is the biggest thing here. If you just talk to the neighbors in an area, you will find out so much more about that specific neighborhood. Check whether local businesses are opening or if they're closing. A cheap block that's improving is often a better long-term bet than an average block that's slipping. If you're planning on renting this house out, tenant quality specifically is a big deal. Remember that good tenants have options. They get to choose where they feel comfortable. They want safe parking, where walking at night is safe, where neighborhoods look out for each other. If you're buying an investment property or if you're thinking about buying a home and then renting it out later, the block's feel will determine a lot of like what kind of tenants you're going to get in that house. So in this market, the block matters more than the neighborhood. The new zoning rules can make or break an investment strategy if that's what you're buying for. I know I bought my first house knowing that in the future I wanted to rent it out, that this was just a stepping stone. So if that's you, that's something that you really want to pay attention to. Obviously, because you're going to live there for a couple of years, but also because you want to make sure that you have a house that's going to be a good investment and not just bleed you dry once you move out. Safety trends quietly drive long-term appreciation and tenant quality. Do your homework. Verify zoning before you commit, especially if you wanted to do like a house hack with an ADU. Buy what's trending in the right direction, not just the snapshot. So you can still buy and have a good deal in a neighborhood that some people may not think is super great, but it's trending in the right way. If you want help buying your first house or second, and this is kind of going to be an investment property for you, reach out. I would love to talk strategy and help you get that first property My contact info is in the description below. It's also in my bio on my main channel. Thank you for watching.